if you're at 1,000 and you go to 2,000, the chances of going to 4,000 is 50-50. And when you get to 4,000, the chances to go to 8,000 is 50-50. We're at that 4,000 in gold, and the chances of going to 8,000 is 50-50. So what you're looking for is suddenly, I've got this asset, silver, because obviously RB and everyone else will be thinking it's going to go to 100. Oh yeah, it's going to go to 100.
There you go. You think you're doing well. Wait to how you feel. When it hits $91, 90.58 is your second interim in HVF method. Where's the final target? In case you don't think 330 is a big call.
Clem Chambers and Francishunt outline the asymmetry now emerging in gold and silver as prices move into higher structural ranges. They describe a simple probability framework. When an asset doubles, the next doubling becomes a coin flip, and that logic now applies directly to gold. With the metal stabilizing around the $4,000 level, the next leap toward $8,000 is no longer a distant projection but a realistic 50-50 outcome. Silver, positioned for far more volatility, reflects the same dynamic through the HVF methodology. Early targets in the low $90s signal an intense acceleration phase, but the larger structural target near $330 underscores how compressed this market still is. As sentiment shifts, traders may believe they're doing well at $100 silver, only to realize the real move begins once interim levels are cleared and momentum takes hold. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
We've seen that with this recent liquidity squeeze and with the government shutdown, that a lot of people have been terrified by it, and then it goes away again. Now, that's not to say if you're in a bubble and you think you're in a bubble, you have to sit there and hope it carries on going. You just have to be leaning in. And if you look at that chart, you can see, you can get a sense of proportion. That little bobbly is, oh, what's going on? Nobody knows. Fred did this, Jim did that. You know, this strange reason that nobody agrees with. You just sit pat. If your president comes out and says we're going to invade Greenland, then maybe you do want to get out of the market. But, it has to be something pretty cataclysmic to turn around this long-term trend we've been on now for almost ever. I mean, the credit crunch was that thing. The whole of US housing nearly went down the pan. Yeah, well, that's a reason to get out of the market. And yes, at the beginning of the year, what Trump was saying about tariffs was a reason to get out of the market. And, if he had kept to what he said he had done or was going to do at the beginning there would have been a big crash. But if you take the gaps between moments where you really have to think carefully about whether you want to be in, you go Trump, COVID, credit crunch. Well, there's years between those things. And yes, the NASDAQ will go into a bubble, and yes, it will probably crash. But you don't want to get out of a bubble at the beginning of the bubble. You want to get out of it near the end. And that's maybe 2 years away now. So, it's good to be leaning into this stuff rather than sat there going, oh, I'm going to sit on my hands. I'm scared now. It's good not to be scared. It's good to be careful. Yeah, that's not what's going on. And when the media is saying bust and crash, oh, be worried, that's bullish. And I'll tell you what's bearish. It's when they all go quiet, when it goes like that. And, say, for example, silver went through $60 in the next few days. If people weren't saying it's gone too far, it's going to crash, silver's, never going to go up, oh, it's terrible, that's bullish. It's when it goes boom and you don't hear anything. It goes silent. Then you want to be worried. So, silence in a boom, well, or everybody going Hosanna. That's the other thing. When it was going, it's going to go to $200, $500, $1,000 an ounce, then you want to be thinking about heading for the exit. But when everybody's saying, oh, no, oh, no, it's bad, oh, it's going to go down, oh, it's ridiculous. That's bullish. It's bearish when it goes quiet and when everybody's saying it's going to double from here. It's going to be $1 million by Wednesday. That's when you want to get out. If you're at 1,000 and you go to 2,000, the chances of going to 4,000 is 50-50. And when you get to 4,000, the chances to go to 8,000 is 50-50. Well, we're at that 4,000 in gold, and the chances of going to 8,000 is 50-50. So what you're looking for is suddenly, I've got this asset, silver. They said, so what do you think about silver? What if it's doing that? And I said, I don't care. I'm asleep. I'm a sloth hanging upside down from a tree because I'm so sure of silver going up. fairly large way from here that I'm not really sitting on the pixel and watching it go up and down. I mean, literally, I looked at it this afternoon and went, oh, that's kind of cool. Oh, they crashed the CME, did they? Okay, that's good. But I'm not excited about it because it is kind of, I'm already calculated that that's what's going to happen. So I can sit there. When it gets to 80, you'll be seeing the perspiration coming off my brow because I'll be going, oh, is that it? Is that it? Should I take my profit? Oh, but now it's broken out. It's just the fun time to watch in my book, because if you've got a plan, if you worked it all out before, and if it doesn't behave as you see fit, you sell it and you walk away and you wait for the next bus. And when it does break out, you go, yeah, I thought that's right. Yeah, it'll go up and it'll go up quite a long way. Yeah, it'll be fine. But when it does get up there, because obviously and everyone else will be thinking, it's going to go to 100. Oh yeah, it's going to go to 100. Should I hang on? And I'll be going, don't want to hang out for $20. And that will be the moment when I'll be, doing that, but not now. And I wouldn't care if it came back to 50, because, the precious metals are going a long way, and all the commodities are going to go, hard commodities that is, are going to go a long way. It's only just begun. So, as far as I'm concerned, it's not early days for silver, and it's certainly not early days for gold.
The conversation highlights a clear psychological framework for navigating primary market cycles. Clem Chambers explains that actual danger isn't when people are panicking. Panic is usually bullish. The real warning comes when euphoria takes over or when silence replaces fear. In contrast, francishunt stresses that gold at $4,000 now carries the same 50-50 probability of doubling as it did when it broke earlier milestones. Silver follows a similar path, with long-term structural setups already implying far higher levels ahead. Their approach is simple: prepare in advance, follow the trend, and avoid reacting emotionally to short-term volatility. The real challenge won't be the current move. It will be deciding whether to hold when silver pushes toward its primary breakout objectives. Let's get into the interview.
What about gold? Well, gold is the king, but he's not moving right now as quick as the silver, but moving nonetheless he is. And we are up at 4.2. And this is continuation to the upside, and it's quite a perky day, On most days, if you weren't looking at the silver chart, you'd be pretty chipper with that. Gold price up, gold price up. By the way, rotation trade. Remember the rotation trade that everyone on X knew about, especially their name was Max Kaiser or Pompliano and everything like that? You're 3.74% from your all-time high on gold. By the way, you're obviously at an all-time high on silver. You're at 3.74%. This is your silver chart in how she rolls. That's how she rolls. She said goodbye. By the way, you're at an all-time high on silver. Hands up if you appreciate the fact. Thanksgiving Day, your gift of the moment was an all-time high for silver. That's right. And if you were sleeping on it, by the way, if in any term you were slightly sleeping on that, you didn't trust the sniper. You didn't trust him. Well, you don't have to trust him. It's an on balance of probability of call. I could, of course, have been 100% wrong. You can also go and look at something that's yet to make an all-time high. And I tell you, my guess, that candle gets longer. This is a runaway train, a freight train. The snowball is going down the hill. It is gaining scale. You do not stop the snowball halfway down the hill. The village gets hammered. The village of criminals, the village of genociders, the village of Pharisees and usury extractors, the fakers, the fraudulent, the insider thieves, their Ponzi-onomics sees truth come hitting home. That is where we are. Let's answer the question finally after some pontification of great zeal. Yes, let's answer the question, but I want you to see it in reg scale. There you go. You think you're doing well. Wait to how you feel. When it hits $91, 90.58 is your second interim in HVF method, the true geometry of price. That cannot be fraudulent and over long, big time scales always represents truth and has a high probability of occurring the next meaningful rest on the time frame of review. Remember, this is a very big time frame. One candle is an entire quarter. Just 4 candles is an entire year. Will be at the $91,000 mark. 91,000. I am getting a little bit wishful there. $91, 91,000 cents. $91. You may have a bit of a rest and a pause at that point. If you are not the patient type, and you are large and in charge and pumped and running like a beast and getting super filthy rich, you might want to close a little bit and you might be able to buy some of it back later a little bit lower. But for me, the bulk of the position stays on. I might just take a little bit of cash flow, live a little bit, spoil yourself. I'm afraid the rest of the world won't be doing so well. What comes as good news is going to be very dark, bad news, by the way, and we have yet to address that. The AI bubble, the AI bubble, the AI bubble, the repo contagion of recent October. The amounts the Fed has put into the markets haven't been beaten since 2020, the CV19 event. That's right. They are slipping amounts into the repo markets that haven't been beaten. Where's the final target? In case you don't think 330 is a big call, let's leave it on reg scale and crush this. That's right. That 1980 high is starting to look very, very small now. Even that $90 target is starting to look very small now. That's what we're calling. That's what we're calling. We're calling a move through here. We're calling a move through here. And then an absolute explosion move that will supersede that will see you there for a while. And we then see 4 digits and we see single digits gold, silver, single digits gold, silver. What I can tell you is this is Friday and this is distress. The Sunday open in the Asian session, when you're sitting, I'm assuming you're on the US time zone like us, will be very, very sketchy and could gap very, very wildly. I think we're getting to 90 quite quick. That's when I think the demand destroying event starts to upload, and then you trade the short side on the hyperinflated, the blue owls of this world, SPACs and special purpose vehicles for face ache that have put all their toxic debt that they've raised into one point special purpose vehicle company that are doing terrible deals with them and will be bag holders. That's right. That's how you do it. That's how Enron does it. That's how WorldCom did it. And that's also how Cisco is probably the nearest parallel to NVIDIA. Yes, there's real product. Yes, there's real stuff going on, but there's a big breakdown coming. So watch out for the AI, Korean one. Why Korea? What's that got to do with AI? The biggest exposure, Korean stock market did 85% from the Trump tariff lows. It's up 73% the entire year. The NASDAQ by comparison is 18% up. It has been huge. SK Hynix, the selling in the Korean, the Kospi market will also lead to contagion and knock-on effects in the Korean one. We will show you the technicals for that. Why I think there's a Korean bust on AI contagion. That's right. You'll find out more. So what price am I thinking the open? I think you gap on a Sunday. I think you gap on a Sunday, but it depends how much we do today. If we really moon spike, you might even have a gap down on a Sunday and then it gets filled and then you go again. There might be some profit taking. It depends how much happens today. That's my answer, I'm afraid. It's a bit vague. We're on 56.44. 56.44. That points to, really, I don't know. We'd need to see the close today. It's not too much longer to go for the close, but who knows? I think you could be 57 to 59. I'll be bullish. $57 to $59 on Sunday evening in Asia.
This latest surge in the metals market shows how powerful the current cycle has become. Francishunt lays out the picture clearly. Gold remains the anchor of the monetary system, but silver is accelerating faster, breaking levels with the force of a runaway trend. He describes markets behaving like a snowball rolling downhill. Once the momentum builds, stopping it becomes impossible. Gold sits just below its all-time highs, preparing for another leg, while silver's structural targets extend far beyond $90, with long-term geometry pointing to even more dramatic expansions ahead. The broader setup ties into liquidity stress, repo injections, and an approaching demand destruction event that could ignite the next explosive phase. These moves aren't noise. They represent the early stages of a much larger monetary reset unfolding in real time. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.